Hello, are you aware that it is feasible to earn over 50 lakhs annually in India without ever writing a single line of code, lacking an IIT tag, or holding an MBA from a prestigious field school? A new profession that gives you all the profession that is less known to Indian students and parents. What is that? The actuarial profession is among the best kept secrets within the Indian job market. Currently, India has fewer than 12,000 qualified actuaries, while the demand in sectors such as insurance, banking, and consulting exceeds four times that figure. Look at the states. According to the Bureau of Labor Statistics in the United States, the median salary is reported to be $125,770 per year, which translates to approximately 1.05 crores annually in Indian rupees. In this video, we'll delve into the comprehensive roadmap for becoming an actuary in India, covering eligibility, examinations, institutions, salary benchmarks, and job opportunities. All the information in one video. Stay with us until the conclusion, as the preparation strategy segment will help you avoid years of trial and error and give you a good plan. So, what precisely does an actuary do? Look at this infographic. An actuary is a professional in risk management who employs mathematics, statistics, and financial theory to forecast future events and their financial consequences. When an insurance company determines the premium you pay for your health coverage, it's an actuary who developed that pricing model. When a pension fund evaluates its ability to fulfill its obligations 2 decades from now, an actuary will have verified those figures. When a reinsurance company evaluates catastrophe risk for a portfolio encompassing 10,000 crores in assets, an actuary has endorsed that evaluation. Now you know their responsibilities encompass life insurance, general insurance, health insurance, pensions, investments, banking, and increasingly fintech and insurtech. The fundamental skill is the quantification of uncertainty, converting risk into a numerical value that a business can act upon. This is not mere speculation. This is mathematical modeling supported by data. The IRDAI, which serves as the insurance regulator in India, has a vision for 2047 to ensure that insurance is accessible to every citizen. Achieving this goal will necessitate thousands of new actuaries in pricing, underwriting, and reserving positions. Therefore, the gap between demand and supply is vast and continues to expand. Eligibility criteria are notably accessible. The minimum requirement is completion of class 12 with mathematics or statistics. This serves as the baseline. A BTech degree is not necessary. An MBA is also not required. Students from any academic background, whether science, commerce, or even arts, can apply as long as they have studied mathematics at 10 plus 2 level. Graduates and working professionals are also welcome to apply. Numerous CAs, engineers, and commerce graduates make a transition into actuarial science during their mid-career. If you are a fully qualified member of the Institute of Chartered Accountants of India or the Institute of Cost Accountants of India, you are also eligible for specific paper exemptions. Please check with them. The essential skills needed include logical reasoning, problem solving, analytical thinking, and numerical proficiency. If you are adept in probability, statistics, and structured problem solving, you already possess a solid foundation. Pleasant news is there is no upper age limit. I emphasize there is no age restriction. Whether you are 18 or 40, the opportunity is available to you. Let's understand the Institute of Actuaries India exam pathway step by step in the following. Carefully watch this flow chart. This is how your journey would be. Now let's navigate through the entire exam pathway of the Institute of Actuaries of India, which is the sole statutory body for actuaries in the nation, established under the Actuaries Act 2006. Step 1 is you register for ACET. You register for ACET, which is Actuarial Common Entrance Test, and this serves as your entry point. The exam evaluates mathematical aptitude, statistics, English, logical reasoning, and data interpretation. The format consists of 70 multiple choice questions totaling 100 marks to be completed in 3 hours online. The fee is 500 rupees. A minimum score of 50% is required to pass. Please note, ACET is administered several times throughout the year. Step 2. Become a student member of IAI. After successfully passing ACET, you must register on IAI website. This membership incurs a one-time fee of 4,000 rupees with an annual renewal fee of 2,000 rupees. Without this membership, you are not permitted to take any actuarial examinations. Step 3 is you commence the exam journey. The IAI framework consists of 4 stages. The first stage is core principles, which encompasses 7 subjects divided into 3 modules: actual statistics or CS, actual mathematics or CM, or business or CB. These serve as your foundational papers covering statistics, modeling, and business essentials. The second stage consists of core practices of applying technical knowledge to practical real-world business scenarios. These are actuarial practice, modeling practice, and communication practice. The third stage is specialist principles. This stage allows for specialization in specific fields, requiring students to choose 2 subjects from the list of 7, including life insurance, health and care, pension, investment and finance, derivatives, and general insurance. And the last stage is specialist advanced, and that requires a deeper mastery of a chosen specialization, student must select one subject, SA2 like life insurance or SA3 general insurance to demonstrate advanced application skills. If you pass core principles and core practices, you will become an associate. And if you pass all the four core principles, core practices, specialist principles, and specialist advanced, you become a fellow. So at the senior level, fellow qualified actuaries with a decade or more of experience, salaries were from 35 lakhs to 1 crore annually. Positions at this tier include Chief Actuary, Head of Risk Management, Pricing Director, and Consulting Partner. In addition to their base salary, senior actuaries are entitled to bonuses, ESOPs, and opportunities for international exposure. In comparison, the United States presents a different scenario. According to the Bureau of Labor Statistics, the median annual salary is reported at $125,770, which translates to approximately 1.05 crore rupees. The top 25% of earners make $164,860, while the lowest 25% earn $90,970. At the pinnacle, seasoned fellows at firms such as MetLife, Prudential Financial, and United Health can earn over $200,000 each year. Although the US offers salaries that are roughly 4 to 5 times higher in absolute dollar amounts, India's lower cost of living, promising job growth trajectory, and significant demand supply gap position for actuarial science as one of the highest ROI career paths in the nation today. You face competition from fewer professionals for a greater number of positions, which constitutes a structural advantage. You can see various paths available to you under this sector. The job market for actuaries in India is experiencing rapid expansion and is no longer confined to traditional insurance firms. In the life insurance sector, companies such as LIC, HDFC Life, SBI Life, and Max Life frequently recruit actuarial students and qualified actuaries for roles in pricing, valuation, and risk assessment. In the general and health insurance sectors, organizations like ICICI Lombard, Star Health, Bajaj Allianz, and New India Assurance provide opportunities in pricing, underwriting, and claims analytics. In the reinsurance domain, firms such as Fishery, Munichri, and SCOR offer significant roles that involve managing large portion of risk transfers. In the field of consulting, firms such as Willis Towers Watson, Mercer, Aon, and Milliman engage actuaries for advisory roles related to pensions, M&A, due diligence, and enterprise risk management. In the realm of fintech and insurtech, organizations like Policybazaar, Digital Insurance, and ACO are establishing actuarial teams focused on real-time pricing, telematics, and usage-based insurance models. In the banking and investment sectors, the Reserve Bank of India and SEBI are increasingly requiring actuarial contributions for risk-based capital assessments and stress testing frameworks. Moreover, in the government sector, the IRDA employs actuaries for regulatory oversight and policy formulation. The profession is highly portable. An actuary who is qualified in India with IFOA or SOA credentials can practice in countries such as UK, Singapore, UAE, Canada, and Australia. This represents a global career opportunity with Indian examination fees. You are so lucky to have it. So, in the preparation strategy, allow me to present a practical approach to preparation. The syllabus is divided into 4 stages of subjects, 4 principles, 7 subjects, 4 practices consist of 3 subjects, specialist principles, 7 optional subjects, of which any 2 are compulsory, and specialist advanced 5 optional subjects, 1 subject is compulsory. Core practices consist of actual practice, modeling practice, and communications. Specialist applications level offer subjects healthcare, life insurance, general insurance, pension and other benefits, investment and finance. Start early. If you are in class 12 or the first year of college, register for ACET immediately. The earlier you start, the more papers you clear before graduation, and the earlier you enter the job market with a competitive profile. Second, study alongside employment. This is critical. Unlike an MBA or CA, where you often pass work to study, actual exams are designed for working professionals. Most employers, particularly insurance companies and consulting firms, provide study leave, exam fee reimbursement, and even bonuses for each paper cleared. Do not wait to complete all papers before working. Start working after clearing 4 to 5 papers. Third, be strategic about paper orders. Begin with the core principal papers in CS and CM, since they build a quantitative foundation. Move to CB for business context. Then tackle core practices. Choose your specialist principles papers based on the sector you want to work in. SP1 for life insurance, SP5 for investment, and SP7 for general insurance. 4. Choose the right resources. IAI provides study material for every paper. Supplement with coaching from institutes like Academic Junction or Sankhyaaki if you need structured guidance. Practice past papers extensively. The question style is consistent and pattern recognition is of the pattern. Fifth, manage your expectations on pass rates. A 30 to 40% pass rate means you will fail some papers. That is normal. Every qualified actuary has failed at least one exam. What separates those who qualify from those who quit is consistency, appearing every session and preparing methodically. Sixth, Budget wisely. Total cost from ACET to fellow level is approximately 3 to 5 lakhs over 5 to 8 years. That includes exam fees, membership, and study material. Compare that to an MBA from Tier 1 institution that costs 20 to 30 lakhs. So obviously the ROI is unmatched. You will find a lot of interesting opportunities emerging in non-traditional actuarial domains. Climate and catastrophe risk modeling is becoming a specialized field. Insurers and reinsurers need actuaries who can model floods, cyclones, and earthquakes for the Indian subcontinent. Health analytics driven by post-pandemic awareness is creating entirely new pricing and reserving challenges. The fintech sector is deploying machine learning in underwriting, and they need actuaries who understand both math and regulation. Even pension reform in India, with the NPS and EPS frameworks evolving, requires actuarial sign-off at every stage. Thus, we present the comprehensive actuary career guide for India, covering eligibility, the IAI exam pathway, institutions, salary benchmarks in both India and US, job prospects, and preparation strategy that can significantly reduce the time required for your journey. The actual profession provides a unique advantage in the Indian job market, offering high income, global portability, intellectual challenges, and a favorable demand supply gap. An IIT degree is not a prerequisite. A Tier 1 MBA is not necessary. What you require is mathematical aptitude, discipline, and patience. This is the essence of this trade. Opportunities are available plenty on both the sides. If you found this video beneficial, please subscribe, click the like button, and share in the comments which career in risk and finance interests you the most. I read every comment and it assists me in planning the next video for you.